Recording in progress. Good evening, ladies. Good evening, gentlemen. Good evening, my dear shifters. Today is the 2nd of October 2025, and this is Paradigm Shift Premium Session. It's an absolute honor, and I'm super psyched to have here one of the traders that I think I respect the most from the crypto sphere, one of the traders that I have been following for years. And I have to say, one of the traders that a lot of times I took inspiration from. So without further ado, I want to welcome EXO to our premium session in our community. Welcome, EXO, and thank you very much for being here, man.
Thank you very much. And thank you ever so much for the very kind introduction. It's been a real pleasure interacting with you. And as always, thank you for inviting me on today's stream. Hopefully, there's going to be something insightful for the users, for the viewers, I should say,
Yeah.
to gauge from our discussion.
Well, I think so. And I have to say, like, it's not easy, especially for the people who are on Twitter and who are on all these social platforms, because lately everybody I see it's a trader, everybody's an investor, and it's extremely hard to find like good quality content when it comes also to actionable plan. There are a lot of analysts on Twitter, there are a lot of analysts on TikTok, YouTube, whatever how you want to call them, but just a few people, and you are one of them, that actually has an action plan and explains that before it kind of happens, and you explain it with clear invalidation levels. Like traders do sometimes, you also take some losses, but you own those losses. So in my opinion, anybody who is in the crypto sphere should follow you, because you're also a price action trader. Your analysis is super easy to understand, and I think this is also one of the reasons why I think we vibe so much, because you don't have 50 indicators, you don't try to predict things, you just do your own thing. And I saw you in the bear market, and I have to say I was not that ballsy to short the way you short. I was also shorting, don't get me wrong. I'm more of a bull, but you shorted the fuck out of the last bear market, man. So how was that for you, and how do you feel nowadays about the market?
Yeah, it's no, thank you. I think the first thing I have to mention is that, when it comes to macro investing, I'm not really an investor as such. Primarily I'm a trader. Everything I do or I've shared has always been geared around trading. I think, there are great accounts that cover investing or macro plays, and I think that's more for for those who have a portfolio of stocks, Bitcoin, Ethereum. I think that's great over a long enough period of time. I think SPX will trade $10,000. I think Nasdaq will double. I think Bitcoin will eventually go to 200,000 plus. So, I've no doubt about where the markets are heading over the next 10, 15 years. And for those who are just looking to buy and hold, I think my view is very simple. For every major market correction there is, or a major market crash, I'm just looking to add to that portfolio and not touch it. And it's only a small percentage of my overall net worth or capital. Um, and obviously with investing, I think where I really apply macro is understanding what are the risks in the market. And I think as a trader, you have to really take macro with a pinch of salt, because sometimes good news is bad news and bad news is good news. And what the fuck are you supposed to do as a trader? When you think it's bad news, is the market supposed to go down? But sometimes the market goes up. So I came to the conclusion that, look, when it comes to the overall market regime, the context that we're in, when I look at the macro aspects, I only look for risks, possible risks to the downside, where I'm thinking, all right, I probably need to de-risk or hedge some of my positioning. But 90% of the time, although I do follow macro, it's not actionable as such. But where macro is useful as a trader is if it's FOMC, if it's non-farm payroll day. I'm not trying to predict what the results are going to be. I'm trying to understand, if A, then what do I do? If B, then what am I looking to do for that day? And if with news-based events, it creates volatility in the market. And with volatility, it's what causes price to move further up or down, which will then give you those opportunities, although identifying those areas that you wish to trade for as long as you've understood what the macro implications are. So there's sort of variation. Like you said, there are some people who are great analysts who give you insights about the economy but can't tell you what the trade is. And then there's a balance of, well, some traders trade without really any appreciation for the macro, which I think is dangerous. And I say that because you asked me about how was the bear market. Well, what gave me so much conviction through the roof and very, very high levels of conviction because I knew at the end of 2021 the Fed is likely to be tapering. And from tapering, they're going to be going to rate hikes, which historically shows has seen a significant sell-off in the market. And the rest was history, and I think that's where macro matters, where you're looking for reasons as to why liquidity conditions are going to drive. Because if you look at what drives Bitcoin, if you look at what drives altcoins, equities, Nasdaq, stocks, it's always to do with generally the trajectory of liquidity. And I think when you look at Bitcoin, it does have an 83% correlation to global liquidity. It isn't always one to one, no market is, but the correlations are there to suggest that when liquidity is rising, you probably want to be on the right side of the trade. When it's receding, there could be a correction in the market. So I think that's just to answer your question around what was shorting like, and I think that's where I derived a lot of conviction based upon the macro thesis, and then looking at the technical level. So you've got to understand the macro regime, the overall context, and when I look at the market today, equities and SPX has been climbing this wall of worry. There's been so many doomers on the timeline for the last 6 months, but all equities seems to do is grind continuously higher. Um, and I think even a simple set of moving averages, like the ones that I use, the 12 and the 21 on the daily or the weekly, would tell you not to short the SPX. And sometimes I think it's as simple as letting the technicals show you where there's a turning point in the market and where you need to think about downside risk, as opposed to over worrying about this macro analyst said that, or this economist is saying this, and somebody's warning about a recession in 3 months. I think I fell down that rabbit hole of expecting a recession in 2023 because of everything that happened in 2022. And as a
Guilty,
result,
guilty myself also. I've been there. I've
yeah,
been there. We've been there, brother. Both of us. Remember, we were like
yeah,
really went down the macro rabbit hole. And the problem is like when you go there, there are some macro doomers who kind of drag you even more to that. So it
that's
just
right.
becomes like a I don't know, like a toxic loop. And they feed your bearishness, they feed your negative views, and you're like, oh fuck, it makes sense. And the more it's just like inflates
Yeah.
the fire, right?
Well, that's right, and the beauty of it is, I was very grateful because I nailed the market highs. I exited all my positioning towards the end of 2021, and I flipped aggressively bearish in 2022. And it's like you said, this negative feedback loop of recession is imminent, the economy is going to shit, X, Y, Z is blowing up, kind of puts you in a very defensive mode. So really, when the signs were there to actually this is a really good time to start thinking about accumulation, you've got to get yourself out of this mindset. Look, the market's already come off so much now, and sentiment is fairly bearish. Maybe it's time to shift. So it's a learning lesson, and I think the key thing is I've been trading for almost 10 years. I'm 9.5 years in now. And I believe that if you're not progressing year upon year and you're stagnant in your development, then there's got to be serious questions about your own performance and how you're going to evolve as a trader or an investor. So really, I think this whole game is about refining your process and understanding the way you trade or the way you invest, and working upon yourself and learning from your mistakes and figuring out what you do really well. And every market cycle is different from the previous one. So the challenges are always there. And I think for me, if you look at Bitcoin, it's been a phenomenal run from the lows, whereas altcoins really have stuttered. So for anybody in the crypto space, it's not been very straightforward. It has had many challenges over the last 2.5 years since the lows in November 2022. So and I'm not too sure what to expect in Q4. I think there's going to be 20 plenty of twists and turns in the market, but I think that's great for a trader. That's going to create volatility. That's going to create trading opportunities. I think, and as an investor, if you're positioned into stocks or Bitcoin or equities or indices, you're really trying to identify, like I said, key turning points in the market that may cause you to kind of hedge out your risk or exposure, or look for some downside protection, such that you are then in a stronger position to buy any significant market correction, but also knowing where your thesis is wrong. So you know where to cut those hedges or cut those, add back onto your position if you've essentially cut your positioning.
I didn't want to stop you because you really cooked there. One of the takes or something that I really want to ask you right now is, as you said, you also went down the macro rabbit hole and you saw like people, pushing different narratives, and all the narratives went bust in the last 2 3 years. The market didn't give a flying fuck about them. And I regularly discuss with the guys here in Paradigm, and most of the time, like, tell them, listen, I know that it sounds simple, or some people dismiss it, but I really think that most of the times, nine out of 10 cases, price knows what's up in the market. And if you listen to the market tone, and if you like have the humbleness to let yourself be guided by price, I think that most of the time you're gonna be ahead of the herd. Because to be honest, and like you said, I was also offside when I saw Silicon Valley Bank collapsing, when I saw First Republic Bank collapsing, and I thought, oh shit, the liquidity is also not in the best condition because Federal Reserve has been tapering for some time. So most likely this is going to be like a systemic risk. And guess what?
Yeah.
Max 7 was flying, Bitcoin was flying because Federal Reserve came with the two programs, with the discount window and the BTFT program, and the market didn't care, and the market just rallied and rallied and rallied. And after that, we also saw what happened with the carry trade unwinding, which was just a flash crash. We saw what
Correct.
happened. We saw what
Yeah.
happened with the Trump administration now with the tariffs, right? We had such a big drop in equities, and
Yeah.
when you're looking back, it was just a V-shaped recovery. So any of those top market narratives, or like this is the definite top, this is the definite top, just got blown away. And I really think that all these years until now was, especially in crypto, I think it was very dynamic, and people who didn't have the elasticity or the fluidity to adapt to the new market conditions, and they think that, oh yeah, it's the same type of market. I really think that they have been not necessarily left out, but it was not easy for them because everybody expected that type of all season, right? Oh, Bitcoin
Yeah.
went to all-time high. Now Ethereum has to follow. And guess what? Ethereum didn't even like just barely scratch the previous all-time high. And now what do? You wait for a bigger pullback. Ethereum is gonna go to 7,000. It's not easy. That's why I really think it's important to always evolve, like you said, and like to not stay stagnant, just thinking, oh, okay, if you want to buy Bitcoin, it's fine. That's okay for the long term. But if you're into altcoins, not understanding the new market context and the way things evolved in the space, I really think that you would hurt yourself, in my opinion.
Yeah, I fully agree with everything you said. And I think you hit the nail on the head. If you look at all the big corrections in the market on the indices on the higher time frame, it happens once every so often. But within the larger trend, yes, you're going to get flash crashes. Yes, you're going to get yen carry trades unwinding, and these are just large positional shakeouts. Which, like you said, if it's not a rounded bottom, it's pretty much a V bottom. And if you look at how markets are going to move over the next 10 years, in my opinion, you'd expect that they're going to continue going on higher. And so, with some level of patience, one of the things that I'm actually doing is I'm trying to diversify by starting to trade stocks, single stocks and equities. And what I'm doing is that I'm spending, and I mean literally spending 6 7 hours a day back testing, looking at my strategies that can work on equities. And the reason I'm doing that because I'm not out there to buy equities right now. I'm thinking to myself, okay, look, if in the next 12 months or 24 months, there is a significant correction, just like the one that we saw in April, May, where we saw stocks declining 20, 30, 40%, such as Nvidia, you know that there's a very good chance that you're going to be buying a significant low with unlimited upside. And so I'm not trying to capture the short on stocks to the downside. I'm thinking, look, give me a very deep correction into a technical level and then show me momentum on a set of moving averages from the weekly to the 3 day to the 12 day. I use different moving averages. So on the higher time frames, like the weekly, I use a 20 weekly moving average. On the daily chart, I use a combination of the 12 and the 25 daily, along with the 200, so along with the 100 and the 200. On the H12, H4, H1, I'm looking for a cascading effect where all the moving averages on a stock are starting to point upwards, and such that price is about to leave any range bound consolidation or any flag structure or pennant, and it's likely to expand out into a breakout. Given the fact that the daily regime, where price is above the 100 daily moving average and the 200 daily moving average, and then on the weekly time frame where price is above the 20 weekly moving average or the 50 weekly moving average if there's enough historical data. So the regime filter tells me to remain contextually long. Whereas the lower time frames really helps me get on board of a trade. And once we shift into a bullish regime, it's then okay, let the market do all the heavy lifting until it's time to think about taking some profits off the table, or you have some sort of stop loss system in there where if price trades below the daily 1221, then maybe that's going to be a symbol for me. Okay, I need to start taking profits or move my stops tighter until I get the next range bound consolidation, which I can then look to position, or I'm looking to buy lower down. So that's something that I've been doing. I've been comparing how markets move, and when I compare equities and single stocks.
You want to share a chart of like the one that you're talking about, or you just want to
Oh, I was just talking about from a high level
general
point of view.
perspective?
Yeah,
Yeah,
I
yeah.
don't have those charts set up, but I'm always happy to come in a future stream and talk about some of the trading strategies that I'm looking to use when it comes to trading equities in 2026. But not only trading equities, and I'm talking about actually swing trading them, because if you look, in fact, maybe if I can share the screen, I'll
Yeah,
try to
yeah,
give an
sure.
example.
Please.
Okay, if we yeah share this, just let me know if you can see my screen, please.
Yeah, we do.
So if you go over to something like NVIDIA, and this is what I'm referring to, that um, as somebody who wants to swing trade on the higher time frames, because we know the difficulties that we have in the altcoin space, it's very difficult unless you got into BNB many years ago to really swing trade and positionally trade some of these altcoins. These cycles are very quick. Altcoins seem to move in 3, 4, 5, 6 week windows. You know that they can rally 100 to 200%, and then they can retrace 80% of their move within a matter of weeks. Because that's just the nature of altcoins, the volatility of altcoins, and primarily to do with dispersion and some of the liquidity. You know, there's a very thin, dispersed amount of liquidity floating all around this system. Whereas in 2017, everything was concentrated. I remember when Binance launched, there was about 16 to 20 altcoin pairs, you know, from Neo, Lisk, Stratis, Ethereum, Litecoin, Verge, and everything would just move beautifully together because liquidity was so concentrated. There was Binance, there was Bittrex, and there was Poloniex. They were the three major exchanges. Obviously, you've got Coinbase and BitMEX as well for futures trading. But let's just go back to what I was talking about earlier. And some of the back testing that I've done, let's just keep it really simple without really overcomplicating it. Now, here's an example. Let's just do a replay. If this is NVIDIA in some point in time in the past, where you look at this structure here, and this is why I really like this style of trading and why I hope that if there is a deep market correction in the next 12, 24 months, that I'm cash ready to start trading some of these strategies in those markets that give you huge upside moves from a structural risk from a structural perspective when you're setting up for a trade. So if you just look at this structure here, the we've obviously been in a range bound environment, okay, within a bull trend, okay, and this is just on the daily time frame. And if you look at this, the highs here, this was in August 2023, then again November 2023, December 2023, January, we finally saw the breakout. But the point is that look how much time you would have had to think to yourself, actually, you know, if this is trend continuation and if this keeps consolidating here, I'm looking to buy the breakout of this move up, such that if the daily candle closes above it, I can place my stop at the next or the major significant low. Because really, if we're going to break out into a trend, price has not really got any business coming back into this zone. And even if it does and stops you out and pushes back up again, that's just another reason to step back into the trade hoping that second time around this actually holds, because if it doesn't, then there's probably going to be a problem in terms of it's a fake breakout and therefore price could continue remaining range bound. But if we
Can I
just
show you? Can I show you something here very, very quick? Because it's
yeah,
a
sure.
very strange similarity. Can you split the chart in two and put the hyperliquid chart exactly here?
Oh yes, absolutely.
No,
Yeah,
no.
yeah,
So
yeah.
yeah,
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 split
just
it to yeah,
yeah, split
100%.
and put hyperliquid here because wow. Now I just saw it.
Yeah, so I'll actually talk about this. This is actually one of my favorite trading patterns, and I'll link an article to this. So hopefully it can enlighten users on. Just give me 1 second. Let's just ignore this. Do you know what it is? I'm on the wrong profile. Unfortunately, I'm going to struggle to get it up because it's just the way I've set my charts up.
No
Unfortunately,
problem. I'll show you something after. Sorry to
yeah.
interrupt you. Sorry to
But
try and
I
interrupt
can
you.
switch between, and I know what you're going to say because I was looking at hyperliquid and hyperliquid. I talked about this on my
But
stream, but hyperliquid.
exactly at 50, it had the same pattern, and you watching
Correct.
Nvidia at 50. It's so weird.
Yeah, correct. And we'll just continue with this example for now. And if
Yeah,
I just bring on my trading strategy here, which is the 1221,
yeah.
you can see how price flipped bullish here. I've got nothing to do other than keep riding the trend until price actually starts trading through the bands. Then I can cut the trade. So just imagine that, okay, we've seen price come up into here. And now what I'm anticipating, okay, if we are in a secular bull trend, we're on the weekly, the 12 and the 21 is very, very bullish. Any pullbacks and continuation, you can see how the weekly market regime is just like my market filter. So it's telling me that I want to continue remaining looking for longs. I'm looking for signs of multi-month, not multi-day, not multi-week, but multi-month compression,
Hmm.
or at least, sorry, multi-week as well. I shouldn't have said that. What I meant was multi-month compression, because we talked about this forming from July, September, November, December. You've got 6 months to plan this trade, and such that when it breaks out, all this compression, where the volatility is compressed, just like a spring, when you try to push the two wings of a spring together and you let go, you get this burst of energy. So looking at the weekly time frame with the 12 and the 25 bands here, it's in a bullish regime. This is my regime filter. Then when you look at the daily, I'm thinking, all right, contextually, where can I get long? Because I don't really want to be buying the stock here or here or here and just waiting for 6 months. Sure, that's fine. Some people may wish to do that and just buy and just slowly chip away. I'll buy some here, I'll buy some there because we are in a weekly bullish trend. Any pullbacks into there, I might buy some there. That's fine. That's a very valid strategy. But for me, I want to trade the momentum to the upside. And so for me, when I see a daily close above this consolidation high. On the third day, we should get two, three candles pushing away generally. But for me, my invalidation is here to begin with. So let's see what happens. As you can see, his price is starting to push away now. And it's still riding the momentum of the bands.
Hmm.
And one of the things that you can do when you have what you're really looking for is on these momentum trades, you want to see volume coming into the market to lift the market higher. So volume is the intent of the market, and price is the advertisement as to what's actually happening in the
Can you
market.
repeat that because I really like it?
So volume is volume displays the intent in the market, whereas the price action is just the advertisement of price, isn't it? The
Hmm.
candle is just advertising what the current price is, but the real action comes from the volume. Look at the surge in volume when we've got a breakout and it's sustained. And one of the things that you can do is, let me just get rid of the RSI. Um, Even with the relative volume, you'll see a shift in the relative volume from one period to the next. Obviously, you got to remember that stocks trade regular trading hours, but you can see upon the breakout, we get this surge of volatility. We get some heavy selling coming to the market. But the key to observe here, for all this heavy aggressive selling, it's being absorbed by the market because this is the size of the candle. If this was true heavy aggressive selling, why do we not have a larger down candle? Because buyers are stepping into the market. So in terms of order flow, keeping it very simple, looking for these patterns in the market where if you see large selling volume but price closes higher, that tells you that there is real demand and there are passive players looking to get a position because price is breaking out.
Hmm.
So the point here is that looking at the daily, you can see the trend is just riding up and up and up. So if I've waited several months for this trade, it's one of those trades where I can really size up. I've back tested this over 100 trades. I know in which areas it works, in which situations it doesn't work. I know where I'm risking. There's my entry upon. We've got the 1 day candle closing. On the next day, I'm going to buy at the open for as long as price respects this low. My stop is going to be I can keep trailing the 12 or I can keep trailing the 25. Okay. When you look at the weekly still trending to the upside. Okay, so the point is that I want to keep riding the trend as much as possible until I've got an invalidation point. Now, that invalidation point or that profit taking point could be something like a Bollinger Band on the 12-hour or Keltner channel bands or VWAP, right? If price comes back to an anchored VWAP. So if I use an anchored VWAP from say this point here to where price currently is, don't think it's going to let me plot this because I'm in replay mode.
Yeah, I
So there
don't
we
think
go,
it's
anchor
gonna.
VWAP. Okay, so using the point of the breakout, even the VWAP is all the way down here, which is slightly too far away from my liking because it's going from 73 all the way back down to 63. So I prefer to use, and the way that I do is that when I'm in the trend and prices push significantly away, it's where I drop down onto the lower time frames, like the 12-hour, because I'm now trying to get a tighter invalidation because I want to lock in the gains. But even if we just look at the daily here,
Can
and
I
what
ask? Can I ask you something here?
yeah, sure, go for it.
Where would be your invalidation when the price runs away too far from your moving averages?
That it doesn't matter to me because I just want to stay on side with the trend.
Right.
And generally, what you find is that unless it's a very low float, that's just going to go up and pretty much down again like a low cap. When you're trading these higher mid caps and higher caps based upon news, right? So it's not just the fact that this is breaking out. You'll often find one of the best ways to trade stocks is if there's some news in the market, or if there's an announcement or earnings share, that's sometimes enough to give the stock momentum. And what you find with a lot of stock trading, especially the mid caps and the higher caps, is that a lot of large institutions and funds who are trading this, whether it's swing trading, intraday trading, they want to be trading those stocks with momentum to the upside, and of course some of the stocks to the downside. So for you as a trader, you know that a lot of attention will be going on this one stock that is likely to keep trending because that's where the momentum is. That's where you can capture some really good upside. Or if you're looking for the reversion trades to the downside if a stock breaks down. So in terms of where my invalidation is, if I just go over it now, it really depends. I try to, from what I've tested is, although I refer to the daily, I will have one time frame focusing on the 12-hour chart. And so when you look at where price tagged, this wasn't a reason for me to be invalidated just yet because it is just a healthy pullback into what was consolidation before a move higher. And you can see another gap up. So that gap up in the market, why was that? That tells me that clearly there was some news event um, environment because look, the market sold off 1, 2, 3 days prior, and then we get a huge gap up. So this tells you that there's probably a level of profit taken into some earnings news because it was Wednesday the 21st, or maybe there was some macro news where people were hedging out. But the market then, once the news is out, or once earnings was out, or some event came out, you can see how significantly the market gapped up, taking out the previous 3 days of selling. So just to ride that trend, and again, if I just stopped myself here, I would have missed out on the continued upside. So with trend training, when you are significantly away, one of the things you can do is just start taking profits, partials, and if there is a deep correction, but you are in terms of the weekly, if you look at the weekly, we're still in a very bullish uptrend. So there's no real concerns that we're heading into a bear market just yet. So I'm trying to ride the daily trend as much as possible. And when I look at the 12-hour trend, even that's respecting price. So again, going back into the daily, at what point would I be thinking about cutting or taking profits? Well, the first thing I'm now looking at is all right, if this is a swing trade, I entered on the 9th of January, well, entered on the 10th of January. And I've been riding this up for the best part of 2 months now. And when you think of this from a risk to reward perspective, if my entry was on the open of the next day and my stop is at this low, already in 2 months, I've managed to book what is an 8-hour trade. So there's going to be a point where you have to have done a level of back testing as to what your system is to take profits. What is that based upon? And is that based upon from where we saw acceleration and we're looking to trade a measured move, or is it some VWAP bands, or is it a set of Bollinger bands? It's entirely up to you. You've got to figure that out as part of your system. And it's something that I'm still working on. Like, how do I take profits in a trending market? And is this, and then you've got to decipher, okay, is this actually a trade setup, or are you buying this as part of a tactical or macro portfolio? The way I trade and the way that I'm purely looking for swing trades on the higher time frame. So just to keep it really simple, looking at the 12-hour, now that we've started to really extend out, I know that as soon as price trades under the 21 or the 25 band and starts, one or two things are going to happen. Let's just assume price comes here, fine. I'll take some profit here. And at that point, I don't know if the market's going to continue going lower or if it's just going to consolidate into another continuation pattern. Where it doesn't matter if I've taken profit, because I know that if there's another breakout here, I'm looking to take the trade setup, same trade setup. Stop below here, execution there. And again, this could take 3-4 months. It could take 2 months. It could take 10 weeks. But the point is that I've captured most of the gain to the upside. We are now going through this, either it's a distribution phase or reaccumulation phase. Because if you know anything about markets, is that 80% of the time, markets are balanced. They're range bound, okay? Whether that's, bullish continuation, whether it's some sort of compressed compression like this into a channel which expands out, it's still a level of bracketed rotational environment, albeit the imbalance is up, and then you get a breakout which continues higher. So that's what I mean. I'm looking to build a system that allows me to trend trade and capture some of these bigger movements without really having to be at the market 24/7, waiting for these bigger swing trades. And I think when you look at some of the best traders in the world, like Kolamagi is going to be in the 2026 version of Markets Wizard, and he himself has cleared over $100 million in profits trading stocks. I take inspiration from these guys because he also was day trading stocks. And I think when he first started, it's a really fascinating story. He blew out a few accounts, $6,000, $10,000, he was 22, 23. Eventually, he figured out a swing system, a trading system, where he went on to make $1 million. And I think that was his turning point, where he was seeing the same patterns, but the moves were far significantly bigger. So from day trading, looking for 8 to 10, 5 to 10, or 4 to 3, 4 to 7% moves, he's looking for 20, 30, 40, 50% moves in the market where he could really size up, and he knows that the probability and the win rate is worth taking on these types of trades. But let's just get back to what I was talking about. If I just get rid of some of my scribbles here. I hope I'm not boring you guys, but
What? No, this is very insightful.
the reason I share this is because I didn't want to share what I'm already doing. I thought let's just share something that I've actually been looking at, and then we
Right.
can talk about, okay, well, how can you learn to build a system like this, or how can you go about understanding stocks? And the reason I say this is because I think one of my frustrations, and I'm sure I'm not the only one, that many people in the altcoin space who are trading altcoins are very frustrated that they might be buying certain coins and they're not really doing much. So unless you've got a very good scanner or an alert, the only successful trades that you're going to have in the alt market today, and what has been the case for the last 6 months, is you have to identify momentum. Astar, pump fund when it moves, XPL when it traded from 60 to $1.50. But if you notice one thing, those trends only happen for a few weeks, and then it's something else, and then it's something else. So you have to build a scanner or a system that can identify those moves, that volatility. And the way you can do something like that is look at the last, well, in the say for the sake of altcoins, look at the last 14-day rolling volume percentage. And what you're really looking for is for a volume surge where the volume is 2 times as much as the last 14-day average, because that tells you now that the average true range is about to increase. There's a level of volatility for that pair. Then you want to say, okay, if price has been in a range bound for the last 2 weeks, also notify me when price is trading above its last 20-day high along with the volume. Now you're able to filter out trades that you can think, hang on, here's a trade that I can identify where price is broken out of the last 20-day range high or the last 20-day high. Price has also, in terms of volume, doubled compared to its average 20-day period. This should be on my system because this tells me that there's probably momentum now on this trade, on this market, whichever pair it is, and I want to be looking to capture a trend up if it's going to trend up. And then you can go into the chart and just have a look at the chart and scan it. And if it's in some form of consolidation pattern, let's just assume this is an altcoin that's rallied and it's consolidating. Well, the minute it starts breaking out is when you can think about, all right, I can probably capture a 4 or 5 hour trade into some level of resistance over here. So let me just come back to this example. I know I've kind of deviated away
No. Go
from
ahead, because
different
after that,
variations. I'm just
after
trying
that,
to,
I'll show you exact example on an altcoin based on your example.
yeah, I'm just trying to go through as many touch points and really give some feedback into uh, the chat and the viewers that look, here's some things and variations of what you can be working on, and if you don't have these in place already, well, that's gonna help you become a better trader because part of trading is about trade selection. Okay, and if you can identify, it's like you've got a gold shovel and somebody sends you off to go to a mountain of gold where you've got to find gold. Well, to make to find that gold, you've got to know where you're looking, which areas or which spots do you know where gold is hiding. And it's the same with trading. To find good trades, you have to have a system to know what you're looking for. And that system really depends upon your strategy. What type of strategy are you trading? So, like I said, I don't really actively trade stocks, but I want to start trading macro trends on stocks, and therefore I'm building a filter, a scanner, an alert system that identify these opportunities. Every Sunday, I'll look at my system. It'll pick out, right, these were the best movers of the week. These could be the best movers for the next week if that trend continues. And you can see with this being a multi-day time frame, how much of a move we've gone from $51 to 87. That's almost an 80% move to the upside, right? Then we think about profit taking. Well, you can see that price is starting to show some levels of exhaustion. Price is starting to trade and sit and rest on the 12-day moving average. If you look at the 12-hour now, you can see that's also the case here. If we look at the 4-hour, there is starting to see, if you look at the velocity of these trend lines, there is a slight loss of momentum here. So is this a phase where, all right, we want to be thinking about, well, this is the high, this is a significant low. Is this going to be some form of accumulation or reaccumulation pattern that's going to play out over the next 2, 3 months? Is this going to be some sort of significant correction down into these lows here? We don't know. But looking at that shift in context and environment is what I'm essentially looking for. And when we run this forward on the 4-hour, we are getting that test, but again, we can see price for the first time is starting to form this range. So then I'm thinking, all right, I've caught a fair chunk of this trade. Maybe I can start moving my stops now up here because I don't really want to be giving away too much back to the market. And when you look at the 12-hour, that's round about here. And when you look at the daily, that's also round about there. So maybe I can get even tighter. That if price wicks into the range low, fine. But the minute it comes through it, I'm happy to take that stop there. So from the highs of 96 to 84, we took the execution at 52. We're taking profit at 84. That's still a very good trade. You're never going to capture the top of the market unless you're very highly skilled and know what you're looking for. But I'm trying to work on a system that keeps it very, very simple. I'm not trying to pick tops. I'm trying to pick levels of where I can execute and take profit on what's been a very good trade, and then look for the next trade. If that's going to be compression, if that's going to be some sort of sell-off into support or into support with a V bounce and a correction and the market trends higher, then I want to capture that breakout of that trend here with my invalidation below here, looking for price to come back to the highs. And even that in itself is a very good move. Stop below there, execution there. I'm looking for price to attack the highs. That's a 3 to 4 hour trade. Percentage wise, you're looking at a 33% move on a daily time frame. Again, something that's not requiring me to be at the screens every day, but to filter out those good high time frame setups that may take months to form. It may take weeks, but it certainly isn't going to happen overnight. But let's just continue running this forward on the daily. Okay, so I probably would have got taken profit, stopped out, whatever it is, or even taken 50% off. I now recognize that we're in a range bound environment. I don't have any business trading this. I'm not looking to short this. I'm looking at this market thinking, all right, there's a breakdown in the daily regime. So do you see how I was able to identify that the velocity and the momentum to the upside is fairly strong? Any sell-off is bought up very quickly, but now for the first time, there seems to be a slowdown in
Have
momentum.
exhaustion from the buyers.
Yeah, and the price has expanded significantly when you look at it. So then you look at the weekly. All right, what regime are we in? Are we still in a bullish regime? Well, yes, we are. The 21 weekly moving average is down at 73. I don't mind price wicking below this level. If it continues going lower down, then fine. I'm just going to wait. But if I see price wicking below here and then pushing back up, that's bullish continuation for as far as I'm concerned. Okay, the fact that I don't even know if it wicked there, but let me just zoom into the chart. No, we didn't get the wick there. So even then, the weekly trend is still strong. The daily, you can see it traded below the range low, the local range low. Okay, kind of similar to what Ethereum did and what I wouldn't say what Bitcoin has done, but we've all seen this pattern play out in crypto
We
fairly often.
discussed it, we discussed it a lot of times in the chats.
Yeah, it's such a beautiful fake out that gets everybody panicking. And people like you and me, I remember when we were trading Ethereum, it happened on Ethereum down to I can't remember what price point, but you and I nailed that trade, that trade where it reclaimed and pushed up into all-time highs. That was a beautiful trade. So when you're looking at this, you're thinking, all right, is this consolidation before we get another trend? The high here was in March. It's now May. So we know we've got a clearly defined high. We know that we've got one set of low here. We know that our next level of low here. I'm not really looking to trade this. Maybe from a day trading perspective, you could range trade this. That's absolutely fine. But if the weekly time frame is trending to the upside, there's no reason to be shorting this, as far as I'm concerned, especially when it comes to equities and stocks. You want to be looking to buy the pullback or buy a corrective move. But let's just let it progress forward now. Okay, we are seeing, okay, a breakout of this gap here. Can you see we're at resistance? It's Thursday. Is there some sort of earnings news? You'd have to backtest this. But look, the fact that we've gapped up on this day and closed as this, for me, all I'm thinking about now, look, I'm going to place my stop under here. I'm looking for an execution next day scaling in. Okay, I'm looking to capture trend continuation. Look at the daily. Look at the weekly. It's still in a bullish trend.
Can I add something here?
Yeah, sure.
I don't trade stocks usually, so but I trade gaps in forex. In forex, 99% of the times when we get a gap, it gets covered, especially like in very liquid pairs. But I want to add something very important here because I saw some people like over pushing this gap theory, especially on crypto. Whenever you have a gap in one direction in stocks, this is something that I learned from Steve Burns. The price will continue most of the times in the direction of that gap. So we saw that also like lower when we had the gap above 50 and the price just moved higher and higher. So I would not be surprised that if you start replaying, the price is just going to continue higher.
Yeah, because I think, and that, see, this is the key when you have to understand the market that you're trading. When equities gap up above resistance, and please bear in mind that, look, the high here was in March. This is now May. 2 months of consolidation, and we break up. You know, from a trading perspective, that you can open the next day with some scale limit bids. Your invalidation is here. Fine. If you're wrong, right? This is your risk. That's okay. But you look at your upside that you can capture. You're looking for a 3-4 hour trade or riding the momentum higher. And you're not going to nail this every time, but you should, again, looking at volume metrics, looking at the news, understanding what's happening and where the momentum is. Let's continue higher.
What a surprise. It gapped up and it just
Yeah,
blasted higher.
exactly. And there's a beautiful, simple strategy that you could use here is that when you're long this next day, your initial stop is going to be here, but as the market is pushing up, you can now move your stop. You get another gap up. You can put your stop under here.
And
That's
you get basically a free trade, like you're
yeah,
like risk free.
it's a free trade at that point. So once the price is pushed away after 4 or 5 days, you're now almost risk free. That if price is going to go high, it really shouldn't be coming back below because if it is, it's probably going to retest this high and then continue higher. Okay, so it's a choice that you have to make. That do you leave a wide gap and you're willing to get stopped out, or the other way that I would do it, if I'm aggressive, if I'm risking 2% of my account here, and I see price gap up again, well, guess what I'm doing? Any pullback, I'm just going to add here. That in itself,
You're adding to the position to the
yeah, I would add to the position if it's a breakout because I want to be adding if price is going to continue going higher. So any
I'm
pullback,
intrigued. I'm intrigued. What would be the maximum that you add to a position?
I'm always going to be at 2% risk. So I would then move my stop up and be at 2% risk here. Now
Okay.
I've doubled my size. I'm still at 2% risk, account
Right.
risk.
Right. Right.
So it's dynamically adding to your winners. But what you're doing very sensibly is that you're adding to a winning position.
That's so smart. I love it.
So by adding to a winning position, you are doubling your size such that, if you get stopped out, you're either going to get out for break even or you're really going to hit a home run on this trade. The fact that you've added now onto a winning position and your stop is at break even because you've added, just say your stop was here, you bought this, price pushes up, pulls back, you add more here. Well, you bought this, that's probably your average cost price. You can move your stop under there to keep it as 2% risk. Because remember, you've doubled your position size now. So when you've doubled your position size, okay, say, that's your initial risk. You've added, you have to understand the maths behind the aspects of risk. The point I'm trying to make is that dynamically position sizing is very key to compound onto trend momentum trades. And so, you have to build a system for that. If I go to the 4-hour chart and I see that price took out these lows and it filled this gap here, well, guess what? My invalidation, soft invalidation is this. There's no reason for price to come under here. When you go to the 4-hour and you see price fill the gap, push away, I can add here. So I bought in here, I'm adding there, I'm moving my stop just under there now. So I'm risking still 2% as opposed to my stop being there and risking 2%. But my size has doubled. I'm in a winning position. My average entry is here. Price is over here. I'm looking to trade, ride momentum higher until it's time to take profit. And one of the other things that you can do is in a clear trending market, especially when you get these gaps up, just keep moving your stop to 2 previous days lows. Okay, so 1, 2 candles up, stop there. 1, 2 candles up, stop under here, just below that support level. Okay, and then you get a level of consolidation. 1, 2 candles up, stop under there. 1, 2 candles up, stop under there. See, that's another way you can really trade your
so
stop on a
interesting.
2-day moving basis for as long as price is not consolidating, but actually trending. You can use the 2-day rule. So that again, but there's a level of nuance to this because if you look at this 1 day, 2 day, 3 day, it's more of a consolidation, takes out the previous 2 days lows and then pushes up. So again, here I'm thinking, all right, I'm going to move my stop under here now. When the day closes up here, that's where I'm going to be moving my stop. So that's a very aggressive approach. Now, I would only use this approach, not down here, but once price is aggressively trending. The risk with this is that you may get a nasty sell-off before price pushes up higher. So you could be just having partial of your position, 50%, 30% of your take profit set at some previous 2-day, 3-day low. But let's just run it forward now. I'll quickly wrap up on this example, and then I'll give some. There we go. We would have got stopped out. Okay, on 50% of the position, price comes back into the 1221. Is that a reason then to add on if you see continuation? Or is support being respected here and are we forming another range? That's the question that you have to ask. But when you look at it from a risk to reward perspective, when you look at from where you initially sell, let's just assume that we never added to the trade. We just took the trade for what it's worth. We rode it up based upon the stop basis. That's what you would have captured. 2.5 R, 27% move. Okay. Whether you want to measure in R, whether you want to measure in percentages, entirely up to you. If you doubled your position, obviously you're risking twice as much. Your stops would have been tighter. Your average entry is here. That's what you would have been risking. Still 2.7 R because remember because we have double the risk, we have to have tighter stops. But even then, you're still capturing 2.7 R, but your position size now is doubled. So really, in terms of mass, looking at the previous setup, you would have doubled your money basically, in a nutshell. So I think that's the gist of trend trading. And again, you can see we're in a range bound environment. Our price isn't really doing much. It breaks down, great. There's that sell-off now. This was the yen carry trade, wasn't it?
Yeah.
From last year. So now, these are the opportunities that you see in the market. You think, God, yeah, give me one of these at some point in the next year into a key level of support, or you've got this range, mid-range here, you've got this range low here. Now, the key thing for me, look at the daily. It's rolling over. If you look at the weekly, we are below the weekly. I do not want to be knife catching this at this moment in time. I want to see strength in the market. Going back on the daily time frame, at what point or from where does the market react? That from there is where the market reacts. Okay, so you can see on this time frame, the market is pushed up back into the bands. Okay, we want to see some sort of form of base forming here or a base forming lower down. Where that's going to be, I have no idea. Okay, clearly there's a level of base. Look at the market shifting context back up again now. Okay, so this is on the 4 hour. When we go to the 12, when we go to the daily is starting to shift up again. So you're now going to think, all right, the daily is pointing up, the 4 hour is pointing up. Let's have a look at the weekly. Well, we've reclaimed back above the weekly. So based upon the weekly, your context could have been that if a reclaim above the 12 or the 25, I can start scaling into a position, hoping that we don't really trade all the way back below this low here. And essentially, you're looking to continue with that trend. Even on the 12 hour, the 12-hour price is starting to curl up. The 4 hour is giving us a sign of compression. So any pullbacks in the market, you want to be thinking, all right, I want to be buying this now because we're above the 12.21 or 12.25 on the weekly. We're starting to see selling taper off. Is this a turning point in the market? We've come off these highs here, very clean trade. There's the level. Is this the turning point? There's your market structure shift. Okay, so if we're talking purely about price action on the daily time frame, there's your high, local high, which is a higher high compared to this. It's still a lower high compared to that. But what's key is this higher low into another higher high. That's your shift in context. There's that compression and there's that expansion. Now, really, this should hold. Okay. All
I'm
this should
laughing.
hold
I'm
again.
laughing because our methods of explaining are so similar. I'm
Yeah.
really curious what the guys are saying because even when we're explaining market structure and the shift in the structures now, you just explain something bang on the same like I'm explaining. Listen, we were in a downtrend. We had the sequence of lower highs and lower lows. However, we just got the first information that the market structure might shift because we had the first higher low without creating a new lower low. So when you get that higher low and the first new high, your mind should already shift in like this is already like higher highs and higher lows, and we're just invalidating the previous lower high, lower lows. I'm just smiling and giggling because
No, of course.
I know what's just going on through my guy's
No, no,
mind
absolutely.
right
Go
now.
for it. No, no, it's brilliant. It's brilliant. So even now, the fact that we know we're in some sort of consolidation, right? And let's just assume that we've bought this. Okay. Look at this. This high was in June. This high was in October. 5 months, 4 months, June, July, August, September, 5 months. We are in this high time frame range. Okay. And for me now, it's very clear that look, we have a clearly defined mid level. We've got a nice set of lows, prices above the mid. When you go to the daily, looks good. Looks like a form of consolidation to me potentially. This is October. If you go to the weekly, this is still fairly bullish. But what do we like I said on the high time frame structure, when you zoom out the chart, look at all this compression here. Okay. Um, Look at these areas of compression and expansion. Compression, sell off, and expansion. Look at the size of this now. Is this a top? Many people were calling for a top in the market. And like I said, the problem with calling a top is you could very well be right, but how much money are you going to make versus catching the trend to the upside? On the downside, you're limited, unless you're day trading or intraday trading, fine, absolutely go for it. But if you're looking for those high time frame momentum based swing trades, I'm looking at this thinking, you know what? I'm already long from here and I'm looking to hold this to go back to the range highs. Now I could take profit here. Absolutely, I can take profit, right? I can take this trade. I never got stopped out below these lows. I've taken it to the range high. I could take profit here. Now your question might be, well, Exo, if you've taken profit here, how do you know it's not going to go higher? That's not a problem because I'm already positioned in my mind that I know exactly where I want to get into. If this is going to break out and give me a candle close above here, I'm taking that same trade. All I'm doing is avoiding from a winning position, giving any money away back to the market because we're not in a trending environment. We are in a 6 month range bound environment. And so the next big swing opportunity comes either we're going to break up, or, the market's going to come all the way back down to the range lows. I don't know what happens next. Okay. Um, that's what I'm thinking, that it's time to take profit. If it's going to trend higher, I will trade the trend higher now at this point. Let's run it forward. We've got a slight breakout. I'm just going to give it time to say, okay, show me a second day breakout above here, and I'll look to position, because at this point, I don't know if this is just a swing fail of this high.
But
Whether
Exo, you're buying in all-time high. How can you long in all-time high?
I know it's okay. So you can see sometimes it's just a context. For me, this wasn't a clear, classic, continuous compression, okay, or channel where we've got to move up, it's correcting, 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 and we start seeing price breaking up higher. Okay, it's more of a range bound environment. So we're still at the range highs. That's fine. There's still a case to be bullish. We're still holding above the highs. Okay, we've broken down. So you see how in this instance there was no trigger for me because we didn't get an explosion higher, and the volume will probably indicate that this was a very low volume breakout. There wasn't any news, there wasn't any catalyst for this. Therefore, it probably looks to be a trap. Trap traders have got caught there. Okay, and you can probably see across the general market, looking at other pairs, looking at other equities, how are they performing? How is Micro 7 performing? How is indices performing on that day? Is that looking fairly toppy? Then maybe it's time for a correction. But then we get the push up. Now I'm thinking, all right, this now to me is a much better opportunity to long. I'm going to put my short under, stop under here. I'm happy to long this here, stop there. We're above the moving averages on the daily, on the weekly, on the 12-hour. Time for a momentum trade. Let's go. All right, and I've just got taken out there. See? So again, an example of a trade that I've tried to trade for the momentum. Not every trade is going to be a winner. There are going to be times when I get stopped out, and if I get stopped out, that's absolutely fine. All I'm thinking, fine, you've taken me out once. If you can get back above there a second time, I'll take that same trade, stop under there, because I think if it's failed once, it shouldn't really fail twice. If it's failed twice, I'm wrong. I'm reading the market wrong. I put my hands up and I step away for something clear to set up. Okay, we didn't even get the trigger until this point in time in the market now. Now we're gapping up, okay? So for me now, I'm thinking, looking at this, fine. We're above these highs. I can have one more attempt at this, stop under this low here, but I'll probably conservatively start small, half position size, okay? As price pushes away, then I'm going to add, bring my average entry higher up, okay? But my stop is going to be moving with that. So let me just get rid of the scribbles. And again, all of this, it might seem hindsight, but I'm literally talking as if
this is happening right now.
Yeah, I can't remember when I last traded this. And I got stopped out again. That's just the nature of the game. So it was a failed breakout once, twice, three times. Okay. And that's just the nature of the market. Sometimes when you're trading trend, it doesn't look like it's going to work out. But the key here, and I'll repeat again, the reason why I went over this example is because if you truly look at price structure here, if even when you go to the weekly, the 3-day, does this look like it's compressing enough or long enough where it's ready to break out? No, it doesn't. If you really look at the bigger picture, it's just I forgot what this pattern's called. It's just a
Symmetrical triangle.
ascending triangle. Yeah. Is this just consolidation, compression? So we've had 1, 2, 3, 4 attempts. Is it going to be one of these? Okay. So sometimes just zoom out, look at the bigger picture. That is this all distribution or is this all reaccumulation? And if you look at the examples that I gave you here, this was a much cleaner indication. So again, I'm really happy to go over why I took these trades. They were shit trades, but really, if I zoomed out and looked at the bigger picture, I'm thinking to myself, this needs more time to develop, and then I can think about the breakout trade here. Okay, so really, it's about identifying structures on the higher time frame. Not that every high or every breakout is a breakout trade, because you will get chopped up. Just like I showed an example of, here's a reason of, oh look, but Exo talks about breakout trading. Why is this failing now? Well, it's failing because I'm not paying attention to the higher time frame contextual environment here, which is this. This is not a structure that I can get behind in terms of longing on a breakout trade. Let's run it forward on a weekly basis. Let's see what happens. I'll probably slow this down a little bit and we can just keeping our temporary scribbles, okay, into the market. It's a bit too tight, but I'm just quickly drawing this for the sake of examples. Does this break? Does this hold? I don't really care. All I'm thinking about is I know exactly where I'm looking to take the breakout trade, okay? So on the weekly time frame, you can see that we lost the weekly bands. We're back above now. Now it's starting to become interesting because we're going back for those highs after trading lower down into this key support. So even from a high time frame perspective, we had this really lovely pullback into support. And if you notice, this was
This
the
was the Trump news with the
correct, yeah,
tariffs.
yeah, exactly. Which I think I was positioning short for on Bitcoin anyway. But again, looking at the context, Trump tariffs, prices breaking down. Look at the daily. These were the highs in January. These were the highs in January. These were the highs in February. We've gone from 145s all the way down into 87s. Into what? We've gone into this key consolidation zone. So if it's not a breakout trade that I'm looking for, then it's going to be a retest of demand. Where did price react from before? It was off this level here. So any under and back over is an opportunity to get into the market, whether you're buying here, whether you're buying here, you know where your invalidation is. So guess what? This now becomes one of those trades where you're looking to trade it as a range. And if the range breaks up, and remember the high time frame weekly consolidation, weekly ascending triangle that we talked about, that's the pattern where above here, you're looking for that trend up. Let's see what happens. So you're now getting a potential fourth test of the level. You might want to take profit. And if you get the breakout, you can step back in again. That's the breakout for me done because we're retested the highs. We're pushing away. Execution there. Stop below the 1221. Okay. Now zooming in. I shouldn't really, if this looks to me now, even when you look at the weekly, it looks like a far better compelling structure of consolidation, reaccumulation. Now looking for trend continuation higher. We might get a pullback. Okay. Fine. If it does that, I'll cut the trade once it gets back above. I'll look to take the long above this high because we could still be compressing and then break out. Okay, that's where you got to be thinking. So getting above this high is going to be key for me. All right. So again, we'll just leave this on the weekly time frame and see what happens. Let me get rid of this red scribble here. So far it's performing fairly well. I don't really want to see it break below this 153 level. And that's where price currently is. That's all there is, I guess, to it. So I'm not even looking at which year are we in or what time frame this is. I'm purely going off the instinct of, look, this could be a trend continuation trade higher if it's going to go higher.
But you don't care about the
Oh,
news. You don't care about the news with Nvidia, with China, with Trump.
yeah. Well, like I said, there's got to be a catalyst. You can't just trade these breakout trades, trend trades, purely from price action. If you can, it's like crypto trading, right?
Right.
If you know there's a fundamental narrative and there's volume surge coming into this price, like we saw with CZ tweeting about Asta or A-Star, or however you pronounce it, you can see how the market just took it even higher based upon fundamentals and a trend. With your comment about
Can I share it? Can I share the chart so you can see exactly what I was meaning?
yeah,
Like
yeah,
with
yeah, sure, go for it. So this is hype. You can see that it's this reminds me of Luna from 2021. Um, when you look at price here, this is not a range. It's what I call um, a channel. And essentially, what you find is that you have multiple tests of this trend line, okay? But you don't really have any clear highs. Look at this. It's you can't call it a range because it's not a range because we're not really testing a range. You have price oscillating, right? Back and forth between high, low, deviation back above, deviation of the high back inside. That's a clear range. When I look at this, it's for me what I call a sign of compression at these lows. Buyers are stepping in, buyers are stepping in, buyers are stepping in. And eventually, what you will find, I'll tell you where you normally will see the big move up, is what is known as a clearance thrust. So it's this high here. If price starts doing this, eventually it will break this high, shallow pullback, then you get the fast move up, distribution, and then you get the dump down into this level. Now, if I just show you an example of this, I know this because this is how I traded Luna in 2021. You will see that exactly happen in, let's go to the weekly chart.
This is a lot of pain for a lot of people.
It's a lot of pain for many people, I'm sure. But you know, the point is that these structures you will see play out time and time and time again. The problem that I have is that they're not very clean in crypto. And if you look at the example about hype, if you think about where fucking all this replay tool,
This is where Hyper is actually right now.
this
This
is
is what,
almost where hype is,
yeah,
right?
yeah,
You
yeah.
have
Like it's
you
very
can't
similar structure, very similar
yeah,
structure.
you can't define this as a range because you have a very clear channel which is multi-touch. Okay, retest, retest. You know, you probably could use an inner channel because sometimes I use two for various touch points, and then I create this zone. Okay, we're still above the zone, we're still above the zone, but it's not a range because price isn't oscillating back and forth cleanly. Okay, it's trading like this: high, 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 low, high, high, and this compression leads to expansion. And this is what Parakev, one of my, who I consider to be one of my mentors, Parakev, I'll share his website. This is where I picked up this pattern form. And when I talked about Luna, for me, the target was $100 because this is where you're going to get the clearance thrust at this point in the market because you've had 1, 2, 3, 4, 5, 6, 7. Generally, when you have 7, 8 touches of this, and you'll actually see this on the lower time frames as well. When you have 7, 8 touches of this pattern, it's above here, pull back, and it just takes off.
I
You
call that a
backtest.
runaway. I call that a runaway breakout. For me, that's a runaway breakout.
Yeah. There you go.
Place-
And then, so this is the clearance thrust, and this is known as the pump before the dump, because you generally get a dump all the way back down to the origin of this move. It's either going to be here
or to
or
the
it's going to
breakout.
be or it's going to be here where you get a reaction. So, you know, you will see signs of this topping out, and you get a reaction off one of those two zones. There's your reaction from that zone. That's your take profit from a shorting perspective. That's from when you're day trading or intra-week trading along because you have a clean setup. But it's the move is pretty much done now. That eventually it should trace back into this level here. Obviously, we know what happened with Luna with the news. You can see you got the retest now of that level, rounded retest of these lows.
Makes
now,
a lower high, and
yeah,
after that just
now it's done. It's over until the next big trend or the next big trend down. But hindsight, we know what happened to Luna. We know what happened to the market. It was a bearish market. We got one more test of the highs actually. That was that second rally in November, wasn't it? October, November, and then the market subsided. There we go. Link also had this structure. I'll give you one example in 2020. I think it was in 20. There we go. It's almost the same here. Yeah, it's difficult really to find it. I can't remember where I saw it, but it was here. Look, if you look at this on the daily time frame, okay, you've got these highs over here. You've got this compression happening in the chart. Retest, retest, retest. Take out the highs and just look at it go. It just breaks out aggressively. And
it's like 100% rally there.
yeah, 100% rally. So again, powerful moves. So I would be very confused, or let's just say I don't think it's worth shorting a market like Hype. It doesn't make any sense to me why anybody would want to short it because they're confusing it with
They're
this.
looking for a clout. They're looking for a clout. You know?
Yeah, I would go out. There's two markets I would never short: BNB and Hype. I just
I just said this yesterday. I think one of these days I said that I would not short. I don't know if it was BNB. I said I would not short BNB, not even with demo money. I think this is what was one of my.
Yeah, you can't be shorting this. Like seriously, it's not worth it. It's just not worth it.
And funny now, like, not funny now, but look, like this looks exactly. Oh, I need to change the color of my writing here. I don't know how to do that. Because I was trying to draw I was trying to draw on your chart. It was looking exactly like you said, like that compression before the break higher.
Yeah.
What I wanted to share, and this is extremely funny because funny. It's like so interesting because we didn't speak like we didn't try to make this look similar, but look at this. This is what I wanted to share with you. Like look at Nvidia before it broke out above 50, and when it was this, like in beginning of September, I noticed this pattern. I said, fuck, this is gonna break to the upside at least to 60. So immediately when it broke out higher, I just banged on this trade with size. And I said, my first target is 55. This was the first place where I took profits. And I said, like, my target for this breakout is going to be 60. So we touch, I think, 59.8. So let's see what happens to the market. What? From here.
Yeah, beautiful example on Nvidia. Yeah.
And this is just an example that it does not matter if you're trading Nvidia, Hyperliquid, orange juice on the Chicago Mercantile Exchange, or cotton, or whatever. Price is price, and price is always
Right.
gonna move. Like the
That's
pattern
it.
is.
And that's why for me, you look at hype and you look at Nvidia. It's like if I was working full time and I can't day trade or be at the desk every day, that's why I would like the attraction of trading stocks, because I know that these forms of compression take many months to build up, and when they go big. And so what the real key to success in trading is a form of pattern recognition. Once you see these play out over hundreds of charts and you have to backtest it, you then have to figure out, okay, now that I see this happening all the time, how can I structure a trade around this? How am I going to end? What's my entry strategy? What's my exit strategy? What's my stop loss strategy? Then, when you find your strategy, you would then want to backtest this. Okay, how often does this play out? How does it work with the moving averages? How can I look at the volume? You know, so you're building a data set that you can quantify what your expectancy is, trading certain structures or trading certain patterns, momentum-based trading, range-based trading, whichever it is. This game for me, when I really think about it, is about having a process, but really, truly speaking, it's about pattern recognition. And I'm not talking about head and shoulders or, rising pennants. It's
Let
about,
me come back. Sorry, 1 second. Let me come
yeah,
back because I see my Zoom crashing. So continue your idea and back in 1 second. Okay.
sure.
Sorry for that. You said that your system is gonna crash, but something happened to mine, so
Okay,
I
no
just need
problem.
to.
No problem.
I think now should be fine. Can you hear me?
Yeah, I can hear you. Yeah.
Yeah. Sorry for that. So you're saying.
Yeah, I think yeah, just my point is that if you're looking to have a system, you can't just rock up to the chart and trade a breakout trade like I've been showing. The real core to everything that I've done is replaying these trades over hundreds of stocks, indices, equities, alts, whatever it is, and understand when these structures work and when they break down. Once you've understood that, it's then understanding, all right, how can I create a trading system around this? Am I using VWAPs? Am I using moving averages? Am I using Bollinger Bands? Am I using order flow, volume profile, whatever it is? You then have to devise a system to figure out how to trade these structures. Then once you've found a strategy, or a strategy that gives you edge or positive expectancy, then you've got to create a filter, a regime filter. So in which environment does this work? And I give an example. So I use a weekly moving averages to tell me which trend environment are we in. If price is breaking through the 12 and the 21 weekly moving average, then I won't be looking for a breakout trade. I'm looking for price to come even lower down and retest a key support level. So then I'm looking to buy a key support, looking to trade back to the range high. And then when price is at the range highs and I'm looking for a trend continuation, well, what does that look like? How am I going to structure that? Do I have over 100 examples of that? So one of the things that I did when I've been studying this is I use Evernote, and on my Evernote, I have over 200 examples of when these patterns and structures happen over the last 20 years. And for me, price is fractal. You can look at a chart from 1920, 30, 40. These structures, these patterns, they all keep playing out time and time and time again. And sometimes what you have to pair it with is understanding the fundamental driver behind a move, because it's no good looking at a chart, backtesting it, and say, "Oh, look, this broke out on this day," but you're not aware of why it broke out. So sometimes you need to go back, and with the access to AI, you can say, AI, hey, what happened to Microsoft in 1996 on the stock? Why did it break out on this day? And it should be able to tell you why if it can troll through the internet, using ChatGPT or Perplexity. So then you look at, all right, on this day, this broke out with this fundamental news, and it pushed away this many points. So now you're building a data set of quantifying that when you get a breakout trade based upon some type of news event, you figure out how many points this moves on average, or how many percent, what percentage move that is. And then you can start categorizing your setup. Breakout trade based upon earnings news out of a ascending triangle with volume, consolidated for 6 months, moved 20%, or moved X amount. And if I structured the trade, I would have made 5R. So now you're starting to categorize your trade, that this is a breakout trade with a fundamental driver. This is a breakout trade with earnings news. This is a breakout trade because Nvidia has merged with China, whatever reason, or Nvidia has merged with Intel, whatever it is. It's building those data sets from historical data, looking at how price reacts to that. And so that you kind of get an idea when you start forward testing this and trading this in the future, you kind of have an edge, but you still have to put in the hard work that when you start taking on those trades, you're taking those trades based upon all the statistics that you've collected. You've done all the back testing, right? It's like this. The analogy that I make is that if you're a boxer or an MMA fighter, you can watch 100 videos of Muhammad Ali or Mike Tyson. Does that necessarily mean that you can now go in the ring, right, and fight in a professional fight? No, you're going to get knocked out. It's the same with trading. You can look at 100 charts, 200 charts, right? But you can't just step up and expect to trade this. So what do you have to do? You get the reps in. Just as an MMA fighter, just as a boxer, you do bag work, you do skip work, you do light sparring, you go in the ring, you spar your friends, your gym members, and then you have some competitions, right? Because then you go into a fight, but it's an amateur fight. And it's the same with trading. You do all that rep work, you do some forward testing, you start trading small amounts of money. Maybe you want to collect more data on maybe everything that I've showed you. Maybe you want to see that on the
Look
1
what
hour
the
chart. Maybe you want to be a trend trader on the 1 hour chart or the 15-minute chart. It's all the same. But what the key is that as you're learning, right, just as you would be in MMA and in boxing, and when you're sparring and when you're having these amateur fights, you're gonna get hit, you're gonna make mistakes, you're gonna get hit, you're gonna get hit on the chin, you're gonna probably get knocked out. Why did you get knocked out? Why did you take a big blow on the face? In MMA, why did you get caught in an arm lock or a headlock or a leg lock? What could you have done better to avoid those situations, or figure out that when I've knocked my opponent out, it's because of this combination. So that's how I think about trading as well. It's no different. That from doing all the repetition, getting the reps in, doing the work, journaling, like after each trade when you've entered, write down, I took this trade because of this reason. This was my psychology. Here's the technical reasons. Here's my expectations. Where am I wrong? I think I'm wrong here. I've put my stop in place. I'm now going to let the trade play out. And then the next day, if you're in that trade, do the same again. All right, so price is at this level. My expectation is this. I'm probably wrong if this is going to happen. And then the next day, do the same. Create a running journal of that trade. And then when eventually you get stopped out, where did price stop out? What happened? Why? What could you have done better throughout the longevity of that trade? So for each week, and if you're running a multi-month trade, for each week, summarize what you saw in the week, what you did, what your thoughts were, what your emotions were. Did you, because price pushed away 10%, did you snatch up profits and it turns out it's gone on to run 50%? Well, learn from that. Did you see price push away for 50% and it's come all the way back down on you because from swing trading it, you became a position holder because you thought, yes, I'm in it for the stock. This is going to go much higher in the next 10 years. But then price comes all the way down and stops you out and you take a big loss. So if you're trying to grow an account, you don't really have that luxury of of just holding a stock when you know that you can compound your winners and keep your losses very small. But to get to that level, you have to start off on a small account, get the reps in, get your journaling going, refine your process, figure out which setups actually work better for you. What may work well for me may not work well for you, and maybe you can find an edge that I don't have, and that's your edge. It's your discretionary. It's your nuance. So that's my key point is that when it comes to trading, to truly make it this game, just like professional sports, you really have to put in the hours. You have to put in the dedication. You have to watch the tape. You have to watch the charts. You have to back test, forward test, quantify your results, and think of trading, systemize your trading. When I mean systemize your trading, I'm talking about truly having a process. Name your setups, name the reasons why you're taking those setups. And don't start off with 5, 6, 7, 8 different setups. Just start with one or two that you see repeating over and over and over again that look fairly easy. And if you have just a small degree of edge, great, because you know what? Even if you have a profitable system that's just ever so slightly profitable, refine it, keep refining it, and then again, and then again. And that small seed, that small nuance that you found in the market, you will eventually grow that into a bigger edge. And that's it. That will be your one trade that you can then take over the next 5, 10 years and really hit some home runs with it. So I think that's the key. The key to trading for me is that everybody's trying to hit big home runs, but nobody wants to do the hard work. And the reality is you've got to bring the best version of yourself to that desk every day. You've got to, I read a really good book called Atomic Habits. It's making those 1% improvements in your trading. And if you can do that over a year, your trading should improve by 100%, especially if you're fairly new to this game. Whether it's reading about the macro, whether it's reading about earnings, whether it's about crypto, whether it's about your technicals, whether it's journaling, whether it's having an alert system, a scanner, there's always something that you can work on outside of the charts. So I think that's my biggest lesson that I've learned is from having no structure to begin with to becoming very systemized in my approach, understanding which trades I want to take, which ones, where, why, what. That's been the key for me. And then looking to repeat those same trades on any given market over and over again. But like I said, there's nuances, like a gap.
Uh, EXO told me that he might have some issues with with his connection. So I think for 30 seconds I'm gonna take over. Uh, it's very interesting because now you guys see how similar we are in approaches, and maybe now you understand not just from my mouth, because you hear me talking weekly all the time for the last 3 years, and I'm banging on the same drum and I'm banging the same table, and I'm saying, listen, you have to do the repetition, you have to do the work. Jay even noticed that we do similar metaphors when he exo chose MMA, and he chose like a contact sport. I chose, football and Messi, and I said it countless times. You're not gonna be like a professional football player if you're gonna watch football 10 times per day, or if you're gonna watch Messi's videos, 500 videos of Messi. This does not mean that if you're gonna put the sneakers on and you're gonna go on a football pitch, you know how to kick the ball. So you guys saw how similar our approaches are, and I really hope that he's gonna come back whenever you're here.
Yeah,
Ah,
that's fine.
and then now you're back.
Yeah.
Yeah, so I was just telling the guys when you cut off that we have very, very similar approaches, and I think this just comes with the humility that you take, like also from the age, also from the markets, because markets will beat you up and chew you out, and like it's gonna bring out all your insecurities, all your traumas, all your things that you didn't work on internally, and they're just gonna come out in the worst place and in the worst time. But however, if you're just gonna progress and if you're gonna continue, you're gonna have consistency in the markets, at some point in time, something is gonna click. For some people, clicks after 2 years. For some people, clicks after 6 months. For some people, clicks after 5 years. But I never seen like a person who puts in the chart time, who puts in the work, like the nitty gritty, and
Yeah.
does not succeed. I never seen it. Or if they don't succeed, it means that they just need to work something internally. Anybody can draw a line on a chart. Anybody can speak about market context, but not everybody can actually trade when it comes to trading, in my opinion. And this is, I think, where it actually draws the line between successful traders on the long run and people who just are tourists. Because tourists, they come, they see some market cycles, they hear about it on some news or on some friends, etc. They try it out for like 2, 3, 6 months, and after, oh, you know what, this is not working. Well, you don't plant a seed now, and you just want to have like a tree tomorrow, right? That type
Agreed. Yeah. Agreed.
that type of mentality does not work. I
Yeah.
mean, if I want to eat prunes, or if I want to eat, I don't know, apples, I cannot expect to plant a seed today and eat the apple tomorrow. But unfortunately, in the times that we live, everything is fast paced. Media, social media pushes this kind of narrative that everybody can be successful from tomorrow, and people forget that, Usain Bolt trained 10 years to run 10 seconds, and this is what it's all about.
Yeah, exactly. I just want to add to the fact that, look, over the last 6 months, I've been backtesting equity stocks. I'm not even trading it live yet. So I've just spent the last 6 months understanding the domain, understanding earnings, understanding gaps, understanding how far price can push away, building an alert system, building a scanner system, to pick out what S&B capital style stocks in play, which stocks have got momentum. Um, and then annotating, writing on these charts, going all the way back 20, 30 years, looking at these patterns, making notes, making folders, all the way back to 2000. What has the market done? Look at market crashes. How can I avoid market crashes? Because everybody focus on the upside, but nobody really talks about the downside risk. And is right back to the start of the conversation on today's stream, like EXO, how was shorting like in 2022? Well, for me, the reason why I did well in shorting is because I endured a lot of pain in 2018. I gave away 75% of my account back from when I started in 2016. I was up multiples. I was up six figures, very close to seven figures. And by the end of 2018, I was down to very low six figures again. So I gave away 70%. And from that period throughout 2019, I just went back and studied all the crypto charts, as many as I could find, altcoins, Bitcoin, Ethereum, equities, indices, and understand what could I have done different? How could I have saved myself from taking a big loss? How would I trade it better? What can I look for in the future? And then once I understood what I need to do to avoid those big losses, how can I then trade it to the downside? And that's why in 2022, you know, I had a very, very successful year trading the market all the way down from 60K Bitcoin, all the altcoins like Solana from 200 down to $20, AVAX from 100 to 15. All the big trades, I took over multiple trades. I talked about it openly. I said what I'm doing. Here's how I'm trading it. I literally put my balls on the line during that period because my conviction was high, and I could see the mistakes people were making in 2022, the very exact mistakes that I made in 2018. So really, really, your mistakes are a price for the education that you pay in this game. And what price you pay is essentially up to you. If you want to make it in this space, truly, if you want to make it, you can make it. But the only person stopping you is yourself. And how you're stopping yourself is it really depends on the quality of your effort at the desk. I'm not talking about spending 16 hours, 12 hours studying every single chart. I'm talking about every aspect of trading, from risk management to mindset to process to systematizing your strategies, using indicators to help you with your game. You don't have to use 100 indicators. I just use 4, 5 maybe. And then understanding what type of setups you're taking, how they perform, journaling, reviewing, collaboration. And what I mean by collaboration, one of the best ways you will improve is actually by collaborating with the traders. I remember myself and Mr. Spread, we were talking about an Ethereum setup. What was it, 3, 4 weeks ago? We
Yeah.
both nailed it in the DMs. We're like, yeah, this is where we think is going to pull back. This is where we want to see a reaction. This is where we're targeting, and we traded it back into all-time highs. I remember that. That was a good trade. So, sometimes it's about collaboration with your peers. Like, all right, what are you seeing in the market? Maybe your peers are saying, "Hey, I think this could break out. It's been compressing for 3 months." Mr. Spread gave a great example on hype. So it's having interaction with those people who really want to go far with their trading, that not only do you add value to their game, but they're adding value to your game. For me, that's the fastest way to learn. A true collaborative environment, because this journey is very, very lonely by yourself. It's finding like-minded individuals who are putting in the hard work to really make it in this game. And the reality is 90% of traders don't make it. That's just a harsh fact. So what are you doing that's different to the 90% out there? How are you thinking about your trading? How are you working? What's your process like? It's like this. I know I keep talking about it, but I'm just going to keep it very short and simple. It's like this. Just imagine that you have to stand up on stage and you have to give a 4 hour presentation about the entirety of your trading system, from your process to your trade setups that you trade, with examples of your trade setups, with your journaling, with your performance, with your risk management and your stats. It's getting to that level where you fully understand your system inside out and you fully understand your process inside out, that you could give a 1 day seminar or lecture about it in a nutshell. And if you can't, and if you can't explain your systemization of it, then clearly you've got inherent weaknesses in your system. And those changes that you make will improve your ability to pick out the right trades. So that's all I wanted to say, was basically it's down to you to really put in that hard work. But that's a given with anything, whether you want to be an MMA fighter, a professional footballer, a golfer. You can't just put 6 months of effort in and think, oh, I've back tested for 6 months. Well, guess what? That's just the entry level. That's basic entry level. Everything that I've discussed is entry level. Where you go from being an average trader to an elite trader is literally reviewing every aspect of your trading month after month after month and finding areas that you can improve and finding areas of weakness that you can drop off or you can work with to become a better trader or investor. That's all I wanted to wrap up with.
Do you have another like 10-15 minutes to take some Q&A after I present something, or it's
Yeah,
like
sure, go for it. Yeah.
Yeah, so based on what you were saying, I had a very, very similar setup, right? Where you're identifying trades. And what I found very interesting is that you do the same thing. And for me, this was fairly new because I didn't trade Euro stocks for quite some time. But
Yeah.
look at this analysis. No fancy things, no nothing, like range bound for about 4 months. And I just saw the breakout. And after I saw the breakout, for me, it was extremely simple. I think this was fairly aggressive. Usually I would have had my my stop loss under the previous day week. But look what happened. And this was already shared since yesterday, and this is where we are now. What I wanna what I wanna say is I think that the moving averages that you use, the two moving averages that you use predominantly, I think that they are very, very close to the only indicator that I use, which is Ichimoku. And also the way I'm using Ichimoku and the way I'm positioning myself and the way I use Ichimoku for market context, it's extremely similar to the way you're using it. So for example, if I look now at Ichimoku, I have like 4 basic rules for buying or for selling when it comes to higher time frame. I do my top-down analysis, and based on the top-down analysis, I have some rules based on which I know if I'm bullish or if I'm bearish, starting from the weekly chart. And for example, I need to see that the price is above the Kumo, which is, and is above the conversion line, and is above the baseline. The Kumo to be thick and green, which gives me momentum. The conversion line to be above the baseline, and both of them to be above the Kumo. We can see that just this week, this broke out. And last one is the lagging span or the Chiku span, which has to be far from the price and pointing to the direction of the trend. So for now, this is like 4 out of 4 and looks absolutely amazing. So if I go back to what I had here, this is on weekly, and I look also on daily. And I just see that we just had the breakout besides the range. So I don't start with the indicators. For me, is support, resistance, market structures, and I see what type of environment I find myself with the asset that I'm trading. And now again, I can apply the same things, and I can see that from weekly time frame, I get another confirmation on the daily time frame, and here also I have 4 out of 4. So when I open that trade immediately after the context which the market gave me after a 4 months compression, I was bang on the trade, and I'm just gonna let this fly. And again, I have my invalidation level. If this falls back inside this, it means that this is a false break, which most likely can take us to the previous lows from here. So very,
Yeah.
very, very, very interesting that we have almost the same analysis when it comes to the context. I knew that this is fairly the same, but I'm curious, do you think that Ichimoku and the way is it built, it's and the averages inside Ichimoku, like the conversion and the baseline, are quite similar to your style of trading with your moving averages?
I think the key is not the indicator. The key is how you build a process around it, you know? Every indicator is good or bad. It's not so much the indicator itself, it's about can you create a strategy where the indicator gives you confluence in your setup. Does that make sense? So
Perfect.
it's like I use order flow, I use footprints, I use the DOM, the ladder for execution on futures when I'm trading Bitcoin, when I'm trading equities and Nasdaq. That's the side of trading that I haven't talked about today, but I use that primarily for looking at order flow. You know, the reason why I didn't want to go deep down into order flow is because it's probably
It's heavy.
yeah, it's heavy. So I didn't want to throw people off and think, oh, this is some holy grail. It isn't. It's just more for intraday and intra-week trading. But really, what I wanted to focus was that just give a reflection of, look, this is what I've been doing for the last 6 months. This is where I think this is the journey that I'm going through, and this is where I'm heading to over the next year or two, 3, 4, 5 years. I wish to transition over into equities and single stocks because I think the opportunities are very good there. You know, especially if you want to trade high time frame momentum plays, which let's be honest, we don't get those in crypto very often.
No, we don't.
You know, it's probably every cycle lows or when there's a market crash that you can buy Ethereum and do nothing for the next 4 years, right? Same
Yep.
with Bitcoin, but you have to wait a long time. Whereas in equities, you can wait every 3 months for these big, big, big breakout trades in a bull market, it doesn't even have to be a bull market. It's just after a significant market crash, you know that the markets over a long enough period of time are going to go up. So it makes sense to me to avoid the drawdowns. I'm not trying to short the market on equities. I'm looking for opportunities, which is breakout up or buying a some sort of capitulation sell off in the market, positioning unwind, Trump tariff type news, event driven based market sell off. That's going to veer reverse back up again. So I'm convinced when you look at markets as far back as 1970 and you look at every major correction, markets are just going to keep going higher. They're going to keep printing money. That's all there is really to it. It's. I just don't see how they can break out of the current system that we're in, which is heavily dependent upon debt and inflation. And currency debasement. So I just think stocks, good stocks, indices, Bitcoin, will continue going higher. And if it's not Nvidia tomorrow, it'll probably be something else. We've
It was
got
Oracle or something else that pops up, right?
But what excites me, you see, about going over to stocks is because I think over the next 5 years, AI and robotics is going to have a big place, a big part to play in the future of markets, if that makes sense, in the sense where there's going to be a lot of emerging low cap companies, robotics companies, AI companies, and it's like in crypto where you're trying to find these low caps, which will go on to become a multi-billion dollar market cap. So it's the same in equities, but over there it's a bit more realistic because the valuations you can make sense of those companies, whereas in crypto you can't make sense of shit. Good
The
luck.
valuations are just on paper, just because I launch a coin and it has the market cap like it has.
Yeah, exactly. It's like I look at Cardano, I just think to myself, it's a great project. Don't get me wrong, but I don't think it justifies the coin being
Multi-billion, yeah,
at
yeah.
billions of dollars. It doesn't do anything. The coin does nothing apart from transaction fees and rewards and you know consensus mechanisms and whatever it is, proof of validation, proof of stake, or whatever the consensus method is. So it doesn't make sense to me. So it's hard to really understand the valuation. Whereas exchanges like BNB and Coinbase and KuCoin and whatever else, Bybit, OK Exchange. At least there's some utility behind them. Hyperliquid. There's a coin. Astar. There's a coin. There's a utility play which tells you in a bull market this should serve well. And same with some of the layer ones like Ethereum and Solana. Well, yeah, because they're kind of central to the entire ecosystem of the majority of, shitcoining, I guess, or DeFi. So they make sense. And then you go down the risk curve where it's beta plays, like you're trading certain coins because you're just trying to capture some upside momentum. But that's only going to be every so often, isn't it? It's not something you can buy and hold for the next 6 years. So that's what I would say.
For me, it was very interesting because when I listen to you talking, it's like I'm listening to myself like 90% from what you're saying.
Yeah.
And I would really pay some money to be like a fly in a room and all the people that they're here in the audience, because now maybe they understand if it comes from another, traders with experience mouth, that these things like actually are the most important things, the one that you pushed on. And now for the last part, we just have some few questions, and I think that the only one who asked some questions is Jay. And what's your outlook for the next months, and how are you positioning for it?
Outcome for the next few months for
All right.
Q4. Yeah, Q4. So basically, look, it's fairly simple for me. I think any sell-offs we see in the market are going to be positioning unwinds, not so much macro risks or structural risk. It's just going to be frothiness in the market. I think there's a case that if Russell goes to new all-time highs and SPX continues going higher and Nasdaq continues going higher, I think we could have a very good Q4. However, as always, be prepared for any downturn in the market. That's all I will say. For now, I'm not seeing any big risks. And when I say big risks, like the market top is in, or that's it for Bitcoin. But equally, I'm not going to be that person who's going to say Bitcoin is going to go to 150K by the end of Q4. For me, I take each day and each week as it comes. Sunday night, I do my macro planning. I do my macro research, and then I look at trades I can take for the week ahead, and that's it. I take it one day and one week at a time. But when you look at the bigger picture, when you look at some of these altcoins, many altcoins are at the floor or on the floor, not really doing a great deal. So it's a question of, all right, are we going to see continuation on them? But the one chart that I like the most is Russell RTY, because
We have it here if you want to talk about it.
when you overlay Ethereum with this, if you just overlay an Ethereum line chart, you'll see how similar they are. And I think this is just an example of price going further out onto the risk curve, playing the beta, and the Russell is the beta, right? And the lower caps and other stocks are the beta plays. So when you look at the correlation between Ethereum and Russell, really you want to see Russell going higher and Ethereum following. And because Ethereum has a higher beta, it should really continue higher. And I think the other thing that I'd like to add is that if we can get above 5,000 on Ethereum, I think that's where you look for the breakout trade. I really do. Because if you look at this consolidation that we have here, is this distribution or is this
No.
reaccumulation in this zone between 3,900 and 5,000? And the fact that we have been here now for the best part of 2-3 months. So if we keep consolidating and consolidating and the bigger macro picture doesn't have any inherent risks, then I think at some point that if we can get above the all-time highs, I think we see a trend up to potentially 6,000 from 5 to 6 fairly quickly. Whether that's a market top, we'll have to see. I don't really like to pick out market tops. All I think about is, all right, at which price point do I think there's a structural shift in the market, a break in market structure, and then I will look at the downside and start thinking about, right, I can short these for a swing trade. I don't want to talk about intraday trading or day trading or intra-week because I don't want to say, oh, I'm looking to short Bitcoin here, and then in 3 months' time, Bitcoin's at 150, and somebody will say, hey, Exo, but you shorted 120, you missed out. Well, I shorted 120 to 116. That was it. Trade done, right? So
I have people from the other bear market who tell me like, oh, you are bearish under 18 and you are calling for 14K. Well, the
yeah,
chart was fucking bearish. I was shorting it. But when it reclaimed 21,000, I started buying also on spot. So what's your point, yo?
yeah, it's unfortunate because we people perceive traders by their own standards. So if you're a Bitcoin investor who bought 15, 20K, you're gonna think that a trader going short at 120 means the top is in and he thinks it's going to come crashing all the way down to 50K. This is how they think, which is wrong. So, that's just the nature of it is you can't please everybody, but all that matters is that you respect your rules, you respect your trading, and at the end of the day, you're not here to please other people. You're here to make a career out of trading and to share. Like yourself, you're just sharing your knowledge with the members. You've got experience in the game. You and I have been talking since the last bear market. And it's really great to see how you're performing, how well you're doing, and it comes with a level of experience, and that's why I say some of the best ways to learn is actually through a collaborative environment with people who are willing to put the time, the effort to study, and work with one another. Like really try to pair up with traders and talk about systems, talk about processes, talk about, videos that you may have watched that you wish to share with other people. That's what makes a community, especially if you want to grow. I really can't vouch how important collaborative learning is, but quality collaborative learning. I'm not talking about enter here, stop here, take profit here. You do that, you'll never become self-sufficient. It's all about being the person who can give those setups, share those setups, and understand why you're sharing those setups. That's the level that you should be striving for, but not just sharing setups, sharing your process. People worry about, oh, I don't want to give my edge away. Let's be honest, no one's going to replicate your edge because your edge is nuanced to you. You can't replace human emotions. Okay, it's like if you tell somebody to buy Bitcoin at 15K when there was, like myself, recession, I probably would not have bought it because I'm thinking, I'm not so sure. I'm little bit worried that price could go lower. But somebody else, who's fairly new to the market would be thinking, no, I want to buy Bitcoin here. It's at discount. Let me go all in. Whereas myself, I don't want to go all in. I just want to buy small percentages on the way up. So, the edge, you can share your knowledge, but you'll never give away your edge because it's very discretionary. The only real edge you can give away is if you have a fully automated bot or system and you literally give that to somebody for free, then that's true edge that you're giving away. But you can't give away discretionary edge. It's very nuanced to yourself.
In the meantime, I was just showing some other examples because I just let you cook. A few more questions. Do you plan to scale your risk exposure if conditions turn more bullish? And how do you manage emotions during euphoric phases?
Um, Dealing with emotions. Okay. Yeah, so will I increase my risk? I'll be very honest with you. My risk is such that in the worst adverse scenario, I don't lose more than 5% of my net worth. And when I trade, I have a spot account, I have a long-term account, and I have a leveraged account. On my leveraged account, it is 10% of my entire net worth. Okay, in terms of trading net worth, so it's only 10%. And when I'm only risking 0.5% per trade, max risk. Now, don't assume that 0.5% is small position size. Like I said, when you have a trade that's going in your direction and you add to it, you are sizing up drastically, but your risk remains the same. So that's how you can really size up on a winning trade. Now, you can't expect to learn to size up on a trade overnight. It's going to take you time and experience and understanding which areas you can compound. Now, in terms of the mental phase, there's actually two books that I really, really recommend that you all read. I'm not sure how to best share those books, Mr. Spread. Maybe you can help me.
I think we can share some PDFs or.
Yeah, it's just two books. So one is called Mastering the Mental Game of Trading by Stephen Goldstein. Fantastic book. One that I read, I think, 18 months ago. I've incorporated his framework into my own trading. And I think my advice would be to anybody who's new out there, this is one of those books that you have to read. It's a must-read book because it will help you really think about your trading moving forward. And then the other book is the Mental Game of Trading by Jared Tendler. The Mental Game of Trading. by just type in Mental Game Trading by Jarrett. That's it. This one, another brilliant, brilliant book. Both books I have read cover to cover, and I've incorporated the frameworks that are shared in this book. And I have now made that as part of my journaling process that I record my emotions pre-trade, during the trade, and post-trade. And from the book from Goldstein, Mastering the Mental Game of Trading, you have to think of a trade as a trade cycle. So there's a setup phase where you're planning the trade. Then there's the execution phase. That's when your emotions are the highest because is it fear of missing out? Is it greed? Are you oversizing? Is it revenge trading? You know, which emotions are causing havoc to your trading? And then once you've executed trade, it's trade management. Are you scared of a pullback? Do you keep cutting the trade and then jumping back in higher and then keep cutting it and then jumping in higher? You'll take many, many losses doing that. So why were you doing that? Is it because you were sticking to your trading plan, or is it because your emotions took over your decision making, but you're not aware of it? So you have to have a level of self-awareness that, oh, I'm going to cut this trade. But it's very impulsive because maybe you're walking out on the street, your phone is in your hand, you see that you're offside, or you see that price has gone up 2%, you entered 10 minutes ago, you're looking for price to trade 20%, but it's gone 2%, and then you've closed the trade for, oh, let me just take this profit. You're taking profit very quickly because you're not used to winning. And you're not used to winning because you don't have a winning system, or you're scared of losing another loss because this is fear kicking in. So when you see this happening in your trading, this is actually the psychological and the emotional aspects of trading causing havoc on what should be a clearly defined process. Your process should be, here's a trade setup. This is what I'm looking for. These are my reasons for entering. This is what I need to see happen. This is where I'm wrong. I'm wrong if this happens. And if this happens, that's where I'm going to cut the trade. And I will accept that. I'm only willing I'm only willing to lose 0.5% of my capital on this one trade. So that's where trading psychology can really help with your mindset. Come to peace with the fact that here's a trade that you're going to take. You're risking 0.5%, and if you lose, you're going to lose $500. Let's just assume you have a $100,000 account. You are willing to lose $500 on that trade, and if you lose $500, that's fine because your system tells you that your win rate is 50%, your expectancy is 0.78, you make on average 2-3 hour a month. Okay, even something as small as that is a very good system because you have positive edge. What you then need to work on is keeping your losses very small. Keep away from those trades that are costing you money and focus on those trade setups that are making you money. Do more of those. But how are you going to understand what those are if you're not recording it, if you're not journaling it? How do you know which are your best setups? So it's all connected. You can't just read a psychology book and think, yeah, I'm going to be a better trader now. It's all built into your process. The psychology, the risk management, the process, the strategies that you wish to trade, the market environment, the contextual environment, the fundamentals, the news. So it's really a multifaceted array of processes that you have to have in place. I call them pillars that you have to have in place if you want to become a successful trader. Because if you ignore one part, it's going to pull you down. If you ignore another part, that's going to pull you down. So you really have to work on all aspects, all facets of your trading, where over a long enough period of time, you have what is known as positive expectancy, which is edge. And if you really think about it, what is trading? Trading is all about positive expectancy. And then you have to understand what is expectancy. If you don't know what expectancy is, then look into what expectancy is because that is essentially what is defining you as a trader. Okay. Understanding whether you have edge in this game or not. And if you don't have edge, then there's no reason why you should be throwing $10,000, $50,000, $100,000 into a trading account because you haven't proven anything to yourself. You are much more likely to blow that money away very, very quickly, as opposed to somebody who spent 2, 3, 4 years risking very, very small capital to build a system, test their strategies, and see a level of profitability. And one of my challenges to anybody who's looking to become a profitable trader, well, here's a challenge. Why don't you for the next 100 trades, journal every single trade and try not to blow your account and just start with a small account. If you can take a $100 account, $1,000 account and trade over 1,000 trades, just try to get out for break even or even small profit. If you can do that for 100 trades, then build upon that. Now you have real statistical data, quantifiable data that when you look at the journal that you use, okay, like an electronic journal or software, and if you remove all the bad trades that you never meant to trade, maybe your equity curve would have doubled. Maybe you would have been at $2,000 or $10,000, okay? Because you've figured out that these are the trades that are costing me money. And I took these trades because I didn't really have a plan or they're a bit impulsive.
Because I was a cunt.
Oh, shit. Really? Great. So I don't know what you heard, but
No. This came from me.
okay. So yeah, that's it. That's it, really.
Then I think you also covered the one of the last questions, and let me see. Okay. The question is not addressed to me, but I would say any sport which implies endurance/resilience has a long-term goal for it with a very strict training schedule. This came from one of the guys in the audience. He was answering to the guys. So he was adding to what you were saying.
Yeah, absolutely. You've got to have a long-term goal. It's like, look at this now, for example, right? I want to trade equities for the next 5 years minimum. And I still to this day have not traded a single stock. For the last 6 months, I would consider myself to be back testing, understanding the market, looking at patterns, so that when the next big market crash comes, guess what? I'm ready to strike. Right, okay, it's time for me to step into the market. Before that, I've got to register with a broker. I've got to figure out how a brokerage works. I've got to figure out which platforms I'm using. I've got to figure out which news streams or which data feeds am I using. So I'm then writing a manual. I have a trading manual. I have a 130-page trading manual. I have a 50-page trading psychology that I've wrote for myself from the inspiration of these books. You know, for all my trading strategies, I trade 4 strategies. I've written them down as to what they are, what they look like. And I've also appended them with 30 screenshots of this is what happens in this environment when I'm looking to take this type of trade. Because that's my system. That this booklet is the key to my trading. It's all my work that I've put together for myself that I then review every single year. And I think that was the turning point in my career when I started in 2016. I didn't have a process, I didn't have a journal. I was oversizing on accounts, I was blowing up trades, I was blowing up leverage accounts. It was at the end of 2018, from October, when I suffered an 80% drawdown that I stopped trading. I started working on a process. I wrote my trading manual. It took me 2.5 months to write it because I didn't have a clue what the fuck I was doing. Then I started working on the mental side of training. Then I started working on a playbook. Then I started like taking screenshots of trades that work well versus trades that I fucked up. So any losing trades, I take a screenshot, I write down a report, what happened, where did I do, why did I fuck up, what could I have done better. Maybe my instinct was wait for price to get to a level, but maybe I front ran it because I was scared of missing out. That was a bad trade. So those, yeah. I've got articles on this on Substack, if I'm honest with you. So I've written my experiences on Substack, and in fact, probably if I can share it in the chat, I honestly, there's one article that I really wish that
I'll do something. I actually had a surprise for you, but
it's
I'm gonna let it fly today. You know that I'm a subscriber to your Substack, and I
all right. Thank you,
really
man.
really enjoy reading. And I received I think like 5 invitations for.
Oh, brilliant.
So I'll make a post tomorrow in which I'm gonna say which are my top picks for Substack, because you know a lot of people are saying, oh, you have a payment group, but they do not know that I invest thousands of dollars for the last few years because I'm subscribed to you, I'm subscribed to Lord Fed, to Capital Flows, to some other guys, right?
Yeah.
So I really appreciate all your work, and I invest in myself because you know all the time you can get better, and I think you know a knife sharpens another knife, like steel sharpens steel. So tomorrow I'm gonna make a post in which I'm gonna give out those 5. I don't know. I'm gonna make a raffle. I don't know, and I'm gonna give out those 5 subscriptions. You know, there's gonna be like 1 month free subscriptions, and after that,
Oh,
people
brilliant. Thank you. It's
can
yeah.
they can follow you there.
Yeah, I just want to point out that the group that I run is basically charity based. It was supposed to be a mentorship that I was running for 6 weeks. And it was just a one-off fee of $59 back then. It will be ending, I think, in December. I started in March, and it was supposed to be for 6 weeks, but I've just let it run for the sake of running. So all proceeds go to charity. But eventually for me, I think I just want to focus on myself and trading equities. But it's nice in a way because I get to share my journey and what I'm doing and the things that I look at, and then feed that back. I've covered everything from my trading manual to my journal to the trade sheets that I've created myself, through to here are the books that I read, here's the courses that I've watched, here are some videos that you should watch. Go watch these videos. These are very good because it will help you. Through to the next few weeks where I'm going to be talking about equities, indices and how I'm looking to trade those. And it's just basically for me to kind of give back to the community. And like I said, it's not a paid group as such, mine. It's more just, it was a one-off thing that I was doing for charity. It was supposed to be for 6 weeks, but then I thought, forget it. I might as well just let it run until the end of the year, and then that's it. But thank you, man. I really appreciate the shout out. I've left a link in the chat, which is a link to an article that I really recommend.
I love that one, the hockey
Yeah,
stick. I
I
think
know, I
even
know I wrote it myself, but I really wish you guys would just go back and read this, and it'll kind of help you understand where you need to be as a trader. And this is known as what is the hockey stick growth of trading. That you start on this sideways trajectory, you keep going sideways, 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 and then once you figured out your process, your game, your growth will be exponential. You'll just keep trading the same patterns again and again and again. So if you look at this, the tinkering is like you figuring out these markets. The blade years is you're just going back and forth. There's a lot of frustration. You feel you're not winning anything. You keep losing money. You make a bit of money. You lose a bit of money. Then you realize what it takes to become successful in trading. You need a process. You need a system. You need strategies. You need to have backtest data. You need to forward test data before you can go live with it. Then you've got to journal it. Then you've got to review your journaling. Once you start seeing profitability, well, guess what? Now you can start sizing up. Instead of playing around with $1,000 account, you've proven that with that $1,000 account over 100 trades, you actually have a positive edge. You've got positive expectancy. Now you can increase it to 5,000 or 10,000. Then do the next 100 trades. Make sure that you don't blow out. Try and ensure that you are profitable for the next 100 trades. If you can take a $10,000 account and run it to 50, well, guess what? Why can't you take a $100,000 account and run it to 500,000? Why can't you then take a $500,000 account and run it to 2.5 in year 4 or year 5 or year 6? So you're compounding your growth year upon year. That's where the hockey stick growth comes in. And I'll give you a classic example. One thing that I am doing currently, I started with a Perps account just yesterday on 1st of October. It's slightly ambitious, but I'm looking for 8% accounts growth per month. Based upon my systems, that's something I know that I can achieve. And I'll be honest, it's only $200,000 account, which to some people it's a lot of money. Well, to me, it's a decent amount. I'm not willing to risk too much, but it's something that I know that over the next 2 to 3 years, if I stick to my rules, I know that can become a seven figure trading account in the next 3 4 years if I'm operating at 5 6 7% monthly growth upon growth, because that's going to compound into larger bet sizing as the account grows. And even for that, my maximum account drawdown is set to 10%. That if I lose more than 10% of my account, I have to stop trading. I have to review my process. I have to review every single trade. Was it because I'm trading the wrong strategy in the wrong environment? Or is it because I'm trading like an absolute twat or an absolute idiot that I'm not even following my process? So I need to then get back on process. To get back on process, I'm going to reduce my size, get back into a winning habit, and then I can size back up again because now I feel as though I'm back in my flow. So sometimes as traders, we make mistakes, we fall out of flow, we oversize, we overbet. And those are the mistakes that we have to slowly remove from our game, because they're the ones that cost us the most. I'm sure there's times where you've had a really good month or really 2 good months, and then in 1 week you've just erased all your 2 months gains because you oversized on one trade, you didn't have a stop, you went to bed, you wake up the next morning, and prices just absolutely ripped through your level, and you're in a massive loss. or you got liquidated, you know? It happens. We've all done it. The reality is we've all been there or done it. But the truth is, if you just think back to all your trades over the last 6 months, and if you just remove all those big losing trades, which I'm sure you are mentally scarred by, if you just got rid of those, just think of where your performance would be year to date as a trader, you know? Whereas, you know, you could have taken 30, 40 good trades, but those 4 or 5 big bad trades are really what's hurt you the most mentally, psychologically. It's hit your confidence. And you know that you could have avoided them, but you didn't. So take that as a positive that, you know, if you keep working at your game to remove all those bad habits, that there is light at the end of the tunnel, that you can become a better trader. And I say that as somebody who's been through that journey where I've blown up so many accounts in 2018, 2019, to the point where now I absolutely refuse to lose even 5% of my account in a month. If I'm on a tilt of 4%, I stop trading. And then I'll just downsize, get my confidence back, and size back up again until I see that I've got winning habits. And I see that, all right, these setups that I took, maybe I was rushing the trade. Maybe I'm picking at the wrong levels. Maybe I'm over trading, you know? So there's always reasons why you can why you can go on tilt, but it's how you control. You've got to have those hard limits in place to stop yourself from what is known as a death spiral, a trader's death spiral, where if you don't stop and if you don't follow your process, you're going to come off track very quickly and you will blow your account up very, very quickly. And if you don't blow it up, you're probably going to piss away 50% in a month. So that's just the harsh reality of trading.
And I want to thank you for being with us this evening. It's more than 2 hours, so thank you for sharing from your wisdom, sharing from your experience. I really loved the way how you ended here in with one of the best advices ever. I always tell this to my guys whenever you find yourself in losing trades, cut your size in half, and after that reduce it to 50%. That's the fastest way, in my opinion, how you can get back on track. Okay, you take a little bit of break, but even if you take a break and you come back with full size, and if you didn't recover full psychologically, that can hurt you. So reduce your size. And I think I don't know what happened, but I see that in the last 3 weeks, I think even you wrote an article about size, right? If I'm not
Yes.
mistaken,
Yeah.
you wrote
Yeah.
an article about size. Creed wrote an article about size, and I have an article prepared for some weeks about size, but I didn't finish it. And I think I'm really, really happy to see traders like yourself that I really respect and really look up to writing about size, because I think this is one of the most important aspects in trading. And I think this is the downsize, the downfall of most of the traders, like the bigger side, that they just want to make it in one trade. And with that being said, again, I want to thank you from the bottom of my heart for being with us here. And I'm going to throw out an invitation for whenever you're going to have some time. We have a book club here in ParadigmShift. I didn't do it
Brilliant.
for some months. We were, guess what? We also had the Atomic Habits in our book club. So let's see how we can sync. And I think the next book club, if you're also accepting the invitation, we can speak about the Mastering the Mental Game of Trading by Goldstein. We can speak about it together. The guys can come up on stage. We can share from their experiences, and we can see how we can all improve.
Yeah, no, thank you for having me, and I hope it's been insightful. Sorry if you've not found this stream useful. I hope you have, and I hope you can take value from it. But I just think really the one thing I will end with is look at what the best traders have done before us. You know, before me, before Mr. Spread. Why have they become so successful? I'm not talking about the best investors in the world like Warren Buffett. I'm talking about traders over the last 15, 20 years who have gone from 20, $30,000 to 10 million, 15 million, 20 million, 30, 40, 50 million. That they are elite traders. Why? What makes them so good? What did they do? How did they get there? And when you understand the depths and the levels that they go to master this game, it kind of sets a standard for where you need to be. And then you've got to be realistic with yourself. Are you there? And if you're not, then you know where you've got to do the hard work. You've got to put the hard work in. But thank you, Mr. Spread.
Thank you, brother. See you on the chat, see you on the charts. See you next time. And with that being said, I really hope that we're going to see you with the mental game of trading for the book club. Thank you, guys. Have a wonderful evening and see you next time. Bye, everybody.
Hey, Mr. Spread. Thank you, bro.
1 second.